this
with
computer.
most.
Got it.
Gotcha.
Thank you.
All right. I sent out the invitation to the platinum, so I think they'll be on hopefully.
Yeah, I updated it on the website as well last night. So
Okay, okay.
cool.
All right. All right. I will get back to you guys after my presentation.
All right, good luck.
Good luck.
All right.
Go get them.
He always does.
Oh, shit.
He gave me a call last night. He's really frustrated.
I bet he is. But here's the thing. I spoke to Kerry last night as well and said, listen, our meeting's going to be about discussing this situation. We need to clear it up. He's like, there's no situation. He goes, Jeff Bezos didn't call me when they raised prime costs. It's like, that's a good point. My bank didn't raise my credit line, call me about the credit line yield or the interest rate on my credit line. They just did it.
Yeah.
How the world works.
They didn't ask for my permission on to raise my
Morning,
property
guys.
taxes.
Yeah.
Hey,
Hey,
Scott, how's
how
it
are
going?
you?
I didn't hear you.
How are you?
How's it
Oh,
going?
okay. My volume was turned on. I'm doing good. Happy weekend or happy week.
Everything good? Everything good down there in Oklahoma?
Well, it could be better always, but yeah, it was a good week. The weather's nice. It's really turned out to be a nice early fall.
Yeah.
We're gonna be in the 90s. We've been in the 90s for a couple of days and then through the weekend.
Really?
Yeah.
I've been overcast and a little bit rainy all week. Oh shit. I left my sprinkler system on. I gotta go shut it off. It's been on for an hour. Give me 1 second.
Uh-oh.
I'll be right back.
All right.
We'll handle it.
I got mine on too, but I'm trying to grow some grass.
Yeah, it's been really dry down here. We had over 30 days of over 100-degree weather.
Wow.
With the indices, it was like 115, 114, day after day after day. It was really a hot summer. Our grass, I don't water it. I just let nature take its course.
Yeah.
I've got 3 dogs, little over 2 acres, but it was
Sorry about that.
brown and crunchy when you walk on it. So
Yeah.
sounds like Rice Krispies almost.
We were okay through June, then July got really hot and dry. I have a well, so I tried to keep it at least greenish, just so give it a shot. And then we got rain and it came back. And now I've replaced the septic system, so everywhere that they dug up, we graded down and I put grass seed in a couple weeks ago. So we've had some pretty good weather. So I've been watering that every day.
Yeah, you got to when you do that.
Yeah. And it's been perfect though, because it's cool at night, it's warm during the day. And this time of year down up here, I don't mind 90s because there's no humidity, in September. It's just a nice warm sun. And then it cools off, when the sun goes down, and it's really nice.
Hmm.
But I was looking up this morning when our first freeze comes, and that's October 1st through the 10th. So
Oh wow. Like to Sunday?
yeah, but
A
it's been
freeze?
it can change pretty quick. They always say up here, if you don't like the weather, wait a minute. It's probably the same in Oklahoma.
It is. That's what they say. Same thing.
Yeah.
This morning it was super nice. It was like 69, 70 degrees. Went for a long bike ride, and
Is your humidity down this time of year?
oh yeah. It's
that's
so
good.
nice. Like if you're gonna come here and spend a long period of time, this is when you start coming.
A friend of mine's coming down to Destin in a couple weeks. He's gonna spend a week.
Yeah, it's nice. It's super nice.
How is the humidity in December in the Destin area?
It really isn't. This past December was a sort of a one-off cold December. It was it got into the 20s around Christmas, and which is really rare. But early December, you know, you get down in it's in the 50s kind of range, 50, 60. Humidity is minimal. So it's
We
good.
were down there last year for about a week.
Mhm.
And I just don't remember how it was. We ended up down in Port St. Lucie, Florida, and
Mhm.
the humidity down there just killed my arthritis. I couldn't hardly
Wow.
take it. It was so wet every day.
Oh,
Uh,
wow.
this year we're going to Galveston for December and part of January. So we'll see how that goes.
Yeah. They have I think a bit of more of a drier climate than we do.
Not really. I lived in Houston for 7 years,
Oh,
and
really?
it
Well,
stands for
isn't
humidity.
Houston? I'm thinking of Alice, Texas. My brother-in-law has a factory there, and I've been there, and it's, you know, one stoplight town, and he's the second largest employer to the government, you know, second to the government, and it's just blistering hot. I don't remember much humidity, so
Well, I'm hoping December to be different. I know
It's
he's
it's
humid.
it shouldn't be that bad down there in December, but you'll still feel a little bit of it.
mhm.
Well, I think we should get rolling here
Yeah.
so we can start our weekend here. So I got a huge amount of stuff. This has been a weird week, you know, and this is the last day of the week, last day of the month, last day of the quarter. Um, and it's been a down week, and it looks like the quarter is going to be the first down quarter since Q2 of last year, maybe, I think is
Really.
what they're saying.
Yeah.
And you know, looking at the charts, we're starting to bounce back a little in the indices here. We're still under a lot of our major. We'll look at them a little bit. We're under a lot of our major metrics that we look at. Of course,
Hmm.
today was PCE, which is supposed to be the Fed's favorite inflation gauge, and core was up 0.1% month over month. Um, they were expecting 0.2, so they're all happy about that. You know, it's still up, and but it's the least since July of 22. But the annual rate, which was 3.9%, the lowest since September of 21. But without the core, you know, when you include energy and food, you know, the things that we use the most, it was
Hmm.
up 0.4%. So everyone was pretty happy. You saw the markets take off. The Dow was up, I don't know, a couple hundred points. Now it's down 21. NASDAQ's up 94. S&P's up about 10. I think some of that with the NASDAQ and S&P is probably because the treasury yields came back a little, but they're still, you know, last I looked at 4.56 on the 10 years. So it's not 4.65. So we're happy it's at 4.56.
Hmm.
And then, you know, we talked a little bit about this week, at least in the blogs, about the deteriorating market conditions. And what I meant about that is, you know, we're seeing a decline in the overall performance of a market or a sector, and that's what we saw this week. And again, we'll look at the charts just to show that. But a lot of it came off early in the week, and you guys pipe in. From my point of view, it was a 10-year Treasury bill hitting that 15-year high, and when the yields go high, the cost of borrowing goes high, the cost of everything can go high for people, and then you know the idea is that it'll hit the growth companies more because they tend to borrow more money uh, because you know their revenues they don't have the earnings, they have the revenues but not the earnings. So that's why you see the you know the big growth companies dump a little bit. And then of course we got crude oil continually to move up, and I think I think we were from anywhere from 91 to $95, depending on if you were West Texas or Brent crude right
Hmm.
now. So they're talking about that hitting $100 a barrel. And if you've gone and filled up your car or equipment and anything, like we've been talking every week, it goes up every week, at least here. We're just a little under $4 a gallon right here still. But I saw, you know, in California, $6 and $7 is what they're paying a gallon. So that's unfortunate for them. But that all plays into the economy at some point, you know, and we look at all these inflation numbers are core inflation minus energy and food. Well, you know, anyone who's just a regular Joe out there, they don't care what the core inflation is. They care what energy and food is, because that's what's costing us money, you know. And if I'm only making something that's fixed every, 2 weeks, and my gas goes up, 50 cents, to $1, and I don't make any more money, but I still have to drive to work and use the same amount of fuel. I'm paying more for fuel at the same amount of driving, and same with food. And that just takes away from your discretionary income, which I say I won't go out to buy Nikes, and I won't go out to dinner and all that, for the average person. And that affects the economy, and that'll come through the economy at some point. And so probably already has, as far as I can see, is already doing that. Any
I heard it.
comments?
I heard a very interesting, I don't want to say theory, but a point. You're seeing the Treasury, the 10-year Treasury, and in the long bonds, the yields going up, and then you're seeing energy go up. Well, the $7.5 trillion is owned of U.S. Treasuries is owned by other nation states, and the one thing they have to have is food and energy. And so one of the ways they're paying for it is they're selling off their Treasury positions, which is driving some of the yields up, as you're also seeing the Saudis cut back. Now Russia has come out and said they're cutting back not just in diesel, but gasoline. They're not shipping anymore. So that movement of we need money, let's take it from our U.S. Treasury position and shuffle it over to our food and energy position, that's the sort of the teeter-totter. And when you look at a chart of like WTI, West Texas crude or Brent, and then you overlay it with the 10-year, it's like they're like in tandem together in moving higher. And it's interesting. It's sort of in a way an economic warfare that Russia is now playing, and the Saudis in a way is playing with us. And I think that's something we should expect, $100 to $110 barrel oil here in the next 6 months, 3 to 6 months, in my opinion, which then would, if that relationship sticks, you'll see a 10-year over 5. And then you take into account the next 6 to 12 months, the U.S. government has to roll $5 trillion from a 2% financed rate to whatever it is at that time. Let's say it's 5. That's an enormous amount of strain on our U.S. government as well. So I was watching CNBC this morning. They're all like, "Oh, everything's great. The economy's, doing." I'm like, "Where the hell are you coming up with this shit?"
Well, that's their job is job is to root for the industry. And I always like when the inflation or Fed stuff comes out, they roll Steve Leisman out there, and he tells us, "Well, what we heard isn't as bad as you think. It was actually good, because look at this one data point I found at the bottom on page 93, and then he talks about that, and then everything's good." So yeah, it's preposterous. And I mean, if you think everything's good, all you gotta do is look at this.
Well, the oil too is related to war. They need to pay for their ammunition and everything. So they keep jacking up the oil prices to cover all their wars and all the other crazy things that are happening, that are coming.
Well, and we've taken a lot of supply, at least out of the United States, off the market. We aren't producing as much anymore.
Yeah,
based on this particular administration's beliefs. So that takes it off.
Where do you get this thing from?
Yeah.
Oh my God.
So here's the debt clock for the U.S. and you can see our national debt is here at 33 trillion. So each of us taxpayers owe about $250,000. Okay.
Wow.
So here's what we spend officially is 6.1 trillion. Here's our deficit, 1.7 trillion. Here's what we bring in, 4.3 trillion. So there's where you get your deficit. So here's your actual spending. I don't know why they have to break these out, the official and actual, but they do. Our actual is almost 2 trillion in deficit and 33 trillion in debt. And you look at the largest budget items, Medicare, Social Security, defense, and then interest on our debts. This is what Trent was talking about, our interest on our debt. Total US, when you come into the unfunded debt, okay, this is the interest we're paying, 3.8 trillion or 14,000 per adult. Now it's not taxpayer, that's adult. Total US debt, 103 trillion. And this is what you always hear, national debt, but the total debt is 103 trillion dollars. Student loan debt's 1.8 trillion, about 41,000 per student. Credit card debt, 1.2 trillion, almost $8,000 per holder. Okay. Look at the population, is 335 million. US workforce now is 161 million. In 2020, it was 160 million. So we're up, one. When you look at full-time workers, 134 100 million, 26,000 part-time workers. These are kind of cool because in 2000, the median home price was 166,000, and today it's 430.
But there's no inflation, Mark.
No, average new car in 2000 is 22, and now it's 52. And well, here's a good thing though, because our median income was 32,000, now it's 36.
I mean, it offsets everything.
Yeah, and then income, you can see, bankruptcies 400,000, foreclosures 112,000, living in poverty only 43 million. Without insurance, only 27 million. So whenever I think about things getting better, I always come over here and I look at this and then I think about it. Go ahead,
Mark. How am I supposed to pay that 98,000 up there?
If you could just write a check and send it to me, I'll make sure it gets there.
Drive it over.
I'll put it in with mine.
When are they going to come and collect that?
Yeah, I don't know. They're going to have to raise taxes because
that'll just take our freedom.
Yeah. I mean, you just can't. We're just not making enough. So anyway, I always have fun when I go over and look at that. It makes me feel really good. Whenever I'm hearing that we're doing really well. So that's crude oil. Oh, and then they look at today's PCE, and a lot of people are happy because now the Fed doesn't have to raise anymore, and they'll probably start lower. And even though they told us they weren't, and then except for Austin Goolsbee, I think Michelle Bowman, Kashkari, Susan Collins all came out this week and said, yeah, we're probably going to have to raise again. With the unemployment the way it is, we're just not getting there yet. Then on top of that, I'm only half an inch down my paper, and we've talked about all this. Then we got the government shutdown, okay, which we've all been through, and it's a really kind of a nothing burger, other than it gives Moody's, an opportunity to be the last major rating agency that has given the U.S. an AA rating to downgrade us. It's S&P downgraded us to A double plus or AA plus in 2011, and then Fitch just did it in August. And so this gives Moody's a chance to save their reputation and do the same thing. And I think they probably will, and it may or may not affect. I don't think anyone pays any attention to that, but it is something.
Is that effective October 1st?
They haven't done it yet, but October 1st is the shutdown, which is Sunday, I think.
Yes.
Yeah.
Okay. Yeah.
Now, I heard they have some things going through, but they play this game all the time. And if you and I didn't get our homework done or work done on time, it's coming, and they do this every time. So yeah. What else we got going? Oh, housing. Let's talk about housing. So I looked up the interest rate, if you want, with really good credit on a 30-year loan yesterday was 7.91%. And Trent, you were telling me your daughter's friends just got a nice loan for 9% or something in that range.
Yep.
So, but when you look at it, they should be getting a deal, because this week sale of new single-family houses fell more than expected to a 5-month low of 675,000. The expectation was 700,000. And then pending home sales fell 7.1% in August, month over month, and they were expecting only 0.8%. So, you're starting to see it get into housing a little bit.
But you're watching the houses also, more houses on the market are coming on now.
Yeah.
So I noticed in my neighborhood, because I keep a close eye on it, because I'm looking for another place. And we've gone from in Ponte Vedra Beach from 140 homes on the market to 182 houses in the market in a matter of a month.
Yeah.
Yeah. So I think more people are getting forced because of so many different market winds going on. It could be, the taxes in Florida, you should know, Trent, are becoming outrageous now.
Yeah.
Especially because of the values of the home, and all the towns are reassessing all the homes. So what they bought it for $500,000 is now worth 1.5 million in Florida. So now they're saying, hey, more revenue for the town, right? So they're going out and reassessing those. On top of that is the insurance issue going on, which is raising all the HOA fees because these communities can't afford to pay the insurance. If you're paying $500,000, now you're paying $600,000, $700,000 for that same $500,000 insurance for the whole complex. Costs are getting out of control, and it's just compounding. And then if you're on a fixed income, like a lot of people are in Florida, either through paycheck or through retirement money, that puts them in a pickle, right? And that's what's happening.
And all that's inflationary too. Your taxes and your insurance.
Yeah.
And like I said, up here, they had the same thing. My insurance and taxes went up, and it increased my. It's more than my principal and interest on my house, and it's actually raised my mortgage payment per month by 50%. Who can do that?
Yeah.
Yeah. And I'm like you.
I saw you could do it.
Well, no, because I went back to my insurance company and rejiggered my insurance and got it back, and then I called the mortgage company and said, what do I need to do, with my escrow to get it back to the payment I've been used to, so
yeah,
that's what you got to do, or
you have to do the one-time payment and up the month.
Yep. That's where I'm at right now, and and I'm not the only one, and I, like you, we usually have, again, I live in the country. We usually have one, maybe two homes a summer that go for sale. People retire or move, reassigned. We have 7 to 10 right now after the tax rate went out a couple months ago, and they're not moving like they used to. They used to go right off, and now my neighbor across the road, he's had his going on 3 months now, and that never happened. So I mean, when we look at economies, and we look at these reports, just look around your neighborhood and look at what you do at the grocery store and look at what you do at the gas station and say, what do those reports say to anything that affects me? Probably not much.
Like as I heard somebody say, it doesn't affect the Wall Street guys who produce it. That's what they're looking at. Right. It's not the average American who's out here and just trying to drive to work 45 minutes each way and spending a ton of money in gas and food and all that. Yep. Yeah. So
and car insurance too has gone up.
You don't see this trend, but up in the north here, at least in New Jersey, tolls have gotten crazy. They keep raising these tolls, and that's another pinch. I mean, my daughter was telling me for her to come up the turnpike and back each day, it's going to cost her like $20
each day.
Yeah,
that's $100 a week.
A week, $400 a month. Like, can I get the easy pass?
Yeah.
It's the costs are just getting insane across the board, and the average person is fighting to stay alive.
But remember, though, the core inflation isn't going up as high as we used to have. Even though it's going up month over month or year over year. So
right,
that's what they're telling us. Yeah. So the other thing that we're seeing reports this week that are probably, going against this whole concept that the Fed's even going to consider not raising in November or lowering sometime next year's durable goods orders. New orders rose 0.2% month over month, and they were expected to fall by 0.5%, which isn't good for what the Fed's trying to do. They're trying to slow everything down. And if we're seeing manufactured durable goods go up, orders, that's not good for them. And then you got the unemployment. Okay. So again, first time filings, it was 204,000 filed, and they're expecting 215,000. I think that's what they were trying to do last week too. It's now, over a 7-month low for the unemployment filing. So they're not, the labor market's, historically tight. And that's what the Fed keeps talking about is labor. They need to have more unemployment. So those two things, have me believing that I'm believing what the Fed says, and they're not going to lower rates anytime soon.
No, I don't see rates getting lowered. But I think in 24, maybe as the election approaches, but they can't lower rates. But I will say to you that I've noticed going out to restaurants, it is a lot slower. It's easier to get a table and hard to go to restaurants. It's happening. People are cutting back. And student loans, they have to pay the student loan now. So
that's next
no
month.
Free ride.
Yeah. I don't think he's going to lower rates until he is dramatically forced to, and it dramatically forces a major collapse in something.
Something breaks.
Yeah. I mean, we've had 402 as of end of July bankruptcy filings. And as you see this 402.
Wow.
In the United States. And so when you start to see these 3-year loans, especially businesses, start to come to mature, which this is the year, if you took it out in 2020, you're going from what, less than 3%, less than 4% to 9, 10, 12, and your revenue isn't growing at that rate, you're done. You're eventually going to start bleeding out. And I think that's
especially like commercial real estate too.
Well, that's the $10 trillion juggernaut that's coming.
They're in trouble.
I think it's, I don't see him raising, just from everything I've read about him and in his belief of how we got here and how we shouldn't have done what we've done. But he would be forced if you all of a sudden see a major real estate company, a lot of banks, which I do think you're going to see a bank consolidation even more so over the next 12, 24 months. It's just got to be big. And I mean, I remember during the great financial crisis, I remember exactly where I saw it and where I was when Bear Stearns filed, when they were like, we're done. And then it started bleeding bleeding through the spring and summer. And that's what, August or the fall of, was it 07 or 08? It all collapsed.
08 is all gone for sure.
Yeah. So if he keeps rates at this rate and you have to refi at these levels and you're not growing at this rate, you're going to get your unemployment real quick.
Well, and that's part of the reason why you're seeing the housing situation, because if I want to sell my house, and I'm paying under 3% interest and go buy a new one, I'm going to get it at 7 to 9 now.
Yeah. Well, it was interesting.
So I want to do that. And normally you didn't care, but now the prices of houses are up so high that makes a difference now. Until they're not.
I reached out to a friend of mine. She's a mortgage lender, and I was curious what a 5-year ARM was. And she said, she came back to me and said, between 6 and 7, but there are no mortgage bond investors willing to pay the ARM loans. So someone could get a 6.75%, but you would have to pay you'd have to pay 3 to 4 discounted points to get that ARM. Well, that's going to take at least 48 months to get that back to break even.
Well,
By
then
that
it's an
time, they'll
arm.
be
It's
below
probably going to
2.
go up. Yeah.
Huh? Yeah.
By that
She's
time,
like,
it'll probably go up.
there's just nobody willing to do it. And so I'm like, what are they financing these things? What are people taking loans out at if they're taking loans? And I got to believe that they're just like, it's got to be slowing for a lot of these banks, especially mortgage
Well,
companies.
absolutely.
Yeah.
Absolutely. Then we've got, I'm going to keep moving on here. The other thing that, they'll tout out there is GDP. GDP came out revised this week, and, we grew 2.1% in the second quarter of 2023. And the Fed sees us in 2023 being at a 2.1% growth for the year. Okay. In 2022, growth was lowered from 1.9% from 2.1%. So they lowered it. They revised that down now after a year. But they're going to say we're going to get a 2.1% growth in GDP. And so on top of that, I saw that corporate profits increased only 0.5% so far to 2.6 trillion, which is less than the estimate of 1.6%, following a 4% decline in the previous period in Q2 of 2003. So we're starting to see corporate profits come down, even though our GDP's come up. So it got me thinking, well, what is causing GDP to go up? And the answer to me was government. So I went and I said, well, where is government spending and where's this money coming in from? And if you remember, there's 3 big bills that went through. And I got to research them. The infrastructure bill, $550 billion in November of 2021. The CHIPS Act, $280 billion in 2022. And the Inflation Reduction Act, the later 2022, $500 billion on that one too. And as I was researching, I'm seeing that money is finally getting released and sent into the system right now. And so those bills from a year or two ago are now reaching, and that's where I think the 2.1% is coming from for our GDP.
It's all government money.
Yeah.
It's all government contracts. I see it where I live. They're redoing the roads, they're expanding them. But that's money that was, bidded on what, a year, 2 years ago to get a project going. So
yeah, construction jobs, those are years ago. The funding was put in place, right? So they have to proceed with it.
yeah.
Yep.
So,
and I think we're seeing that roll through, but it's from money from a year and a half ago that's finally coming through.
mm-hmm.
So those big appropriations bills for me are keeping the economy kind of pushing forward. But on top of that, they also help inflation. Because it's throwing money into the economy. So it's almost like on one hand of the government doesn't know what the other hand, the Fed is doing, and they're fighting against each other, and we'll see what happens.
Yeah.
So anyway, that's the big news that I saw this week, and it was a lot, to sit down and think about. Anyone else have something I missed for market conditions? Anything you can think of?
Today's a big rebalance day for JP Morgan's $16 billion hedge fund. So could explain market movement a little bit today.
Well, it's end of the quarter too, so everyone's readjusting to try to look better.
Exactly. I know in the option world, it's a lot of negative gamma, which is not good in the long term for markets. So I think as we get into next month, it could get really interesting really quick. You're seeing what I saw where if you took the 7 out of the S&P was up, I think 2% year to date. The 7 were up 82% on average. And that's how you average the S&P out at what, 12, 13%. And I find that interesting because it's like a 3-legged stool. Everybody's putting all their weight on one leg. And once that leg gives, what happens next, and I think to me, you couple that with rising lending costs and refinance costs, and eventually that starts to collapse. So plus they raided NVIDIA's offices in France last night or night before. I'm like, oh, here we go. This can't be good. So
well, let's take a look. This is I'm just going to go to a heat map real quick. And this is for the quarter. This is 3 months, what comes up here. And this is the S&P by segments. This is for 3 months. This is for the quarter. So you can see energy did well. Some healthcare did well. Google did well. Microsoft, Apple for the 3 month period. And NVIDIA is only up 3. Okay. Berkshire. But, you know, that's 3 months. So look at just the 1 month then.
But NVIDIA dropped their outlook. Didn't
They
they?
dropped their what?
They dropped their forward projections.
Oh, they did?
Yeah, I believe
Well,
so. I thought I saw something the other day. I didn't see what the details were, but I understand they dropped their outlook.
Well, that doesn't surprise me based on, you know, if you look around the industry and what Taiwan Semi said about, we talked about last week or the week before that they were canceling or not ordering from Applied Materials, you know, the machinery to make the chips for NVIDIA, you know, and just other things that people were looking at their financials and saying, well, you know, are these actual orders or are these just someone saying, yeah, we want to buy them, you know, and then or you book them as actual orders. So maybe some of that's coming through, you know, the chickens are coming off the roost for NVIDIA. And this is the 1 month heat map, and you can see NVIDIA is down 11%, Microsoft down 3%. This is just for the month. Apple down. The only real strong area is energy. You can see over there. Meta did okay. Intel did okay, but for the month, you know, it looks pretty red to me.
Yeah. I think that's a continuation right there.
What's that?
It's going to continue that way. If I look at it and I see opportunities in oil and energy, I think that's for at least for the next month or so. So
I would agree with that.
Get out. Is that what you're saying, Trent?
what in energy?
Yeah.
I like it. I like it. I think from a intermediate term point of view of what's happening, you know, shrinking of supply and I think the rotation out of treasuries to buy energy and food, I think you're going to see that continue to go higher. So I'm positive on energy.
This is the XLE, which is energy ETF. You can see we popped up for 3 days, you know, above the above the 9, but now we're coming down. Looks like we might close underneath. We still have a rising 9. We're still above the 200, seeing weakness kind of in the MACD, a little bit of a rollover. You can see starting in the stochastic, and we're right at 50 on the RSI. So back here was a nice run up, but you see what we did is we hit resistance, and this green line resistance has been pretty solid for me. And then above, here's where your cells are, but your resistance has been a good line. So if you get into oil, use your charts, you know, and make sure you know where support and resistance is because it's so volatile. That if you don't watch it and set your limits tight, it can get away from you. And see, here's Exxon did the same thing. Of course, Exxon is the biggest component of the XLE, so it looks the same. We came up and it hit its resistance, and again, it's down, bouncing off support of the 9. So we'll see what happens. But you're looking at the oscillators, and they're looking like they're getting weak here, just in energy alone. So, you know, everything has a rise, and then it takes a breath, it goes back down, then it can rise. So just remember that, especially in energy. Let's just look at some of the markets. Here's the S&P 500. You know, we just had deteriorating market conditions. We went under the 9 and just stayed. We actually crossed under, you know, 4,300, which is a, you know, psychological resistance line for 2 days. And we came back up. We bounced off it, wicked above it, and then today we went up and hit the 9, and now we're down below again the 4,300 level. We're getting a little bit better on the MACD. You can see the histogram starting to move up. You can see the stochastic starting to move a little bit. Still not much momentum. So again, from a short-term swing trading point of view, you know, we got to watch this. Let's go look. This is the big one here, the Dow Jones. So So the Dow Jones actually a couple of days ago closed underneath the 200-day. So I waited to see what the next day did. And you can see what happened. It was took off to the races, wicked down, and then got some support, came back up, but closed down. Yesterday, it was an up day. Still couldn't get above the 200. Wicked up to it. Today we crossed over, again bounced on the 9. Now we're right back down the Bollinger Band. Still heading down on the MACD. A little bit of a rise in stochastic, and we're just dead, no momentum whatsoever. So the Dow's been taking it in the shorts, and to me, we're now in bearish territory in the Dow Jones, and we'll have to see, are the rest of the markets going to follow? Let's go look at the NASDAQ. Oops, didn't come through. NDX. So NASDAQ's faring a little better because, it has, the big 7 in there. So when with the treasuries coming down a little bit off their highs on the yields, you can see it kind of popped up. We got above the 9, but we're still below the 9, and we'll see where it closes. But we're still above the 200 on the NASDAQ and the S&P. Seeing a little bit of a turnaround on the stochastic, a little bit on the MACD, but we'll see what happens. Momentum's still pretty low, even in the NASDAQ. And then we'll go to the Russell. These are the small guys. The Russell 2000. So the Russell actually looks a lot like the NASDAQ. Came back a little bit. Still having trouble getting over, our resistance level of the 9. Seeing a little bit of a turn on the Bollinger Band. Seeing some little bit of a turn on the MACD, but nothing good enough for me to say this is great, especially since you're under the 200 in a bearish market. And this has been under longer, basically, than the Dow. And you'll see on these type of companies, they're probably exposed more to the finances, and the interest rates that they're having to take loans out to operate. So that's where you're having some issues with these guys. Let's see. I'm going to go. Oops, hold on. To here. This has been a patience week in our swing trading paper trade portfolio. I mean, this has just been a brutal month as far as swing trading up. So you can see 1, 2, 3, 4, 5, 6, only 7 trades, and we are at the end of the month. And same with August. August was brutal too. But luckily we got out of it, just one loss here on Cardinal Health. And we made some gains on Microsoft, Snowflake a little bit, Berkshire, Fortinet, and Chevron. So we're not into anything right now, which because I'm more conservative. But still for August, we're up, just in the paper trade, $876.50. But I'm happy to have that considering, oh wait, that's August. September, we're actually up $1,645, which I'm really happy to have considering what we did in August. But Berkshire Hathaway helped us out quite a bit, and they're always a good one to go to. So we don't have anything really to look at from that point of view, but we can go over and look at, I can find it. Oh, there we go. Horizons, and again, there's a lot of, it's hard to make money when the stock market's going down and everything's deteriorating, but you can find certain things like we've been in Chubb here for a couple weeks, and we started seeing the chart turn around, and actually I put, take profits at 215.15. That's when it hit resistance. And right now we're at 207. So you would have made a lot more money if you got out at 215, even if you traded in this. Then we had K4, Centene, LegalZoom is up a little bit. GE Healthcare has done pretty well. Nucor, Fastenal, we're up about $198 on all these, which I consider fairly good considering the week we've had. If we go over to the 200 list, this one's not as doing as well, but again, you're under the 200.
We're not seeing your chart.
Oh, sorry, guys. Did you see the last one?
No, I just realized.
Okay,
I was so captivated with your voice.
Okay. Yeah. Well, here's under the 200. Sorry. You're captivated with my voice. It's so deep in here. This one we're down, about 774 a share on all these stocks. Again, these are under the 200. They're volatile. These are things that don't meet, all the trading guidelines. It's for more risky, tolerant people who want to trade. So that's why I put this list on. We have our comments. So again, you're seeing RSIs below 50. You're seeing stochastic rollovers. You're seeing MACD rollovers. And it's just, this is the way the market goes. Try to cross these out. If they don't hit certain things and, they close below the 9, they're out, on this list. So I try to cross those out. So the below the 200 didn't do as well as the horizons. Let me go back to the horizons because I guess I didn't show that to you guys. And I'll do that. So let's go over here. We'll do this one. All right. So here's what I was talking about. We've been in Chubb on this list for quite a while. And it's rolled over. You can see the MACD rolled over and closed below the 9. And we're still up. We got in this pretty good if you would have gotten in at the time we put it on. Not to say that it's financial advice. It's totally up to you. These are riskier stocks. These are closer to being on the watch list, but they still don't meet the whole criteria. So depending on what your risk tolerance is, take that into consideration. But on all these 7 stocks, we're up on average $1.90 a share, or $190, which is something I'm happy to see, especially in this week. So let's go take just a few look real quick at some of these stocks. We'll look at Chubb. And let me get you guys on here so I'm not talking and you're being captivated by my voice. This one was really pretty nice because we were watching, it was under the 200, and we were watching it under the 200 list, and then it popped up and we got right above the 200, which is when we put it on the list. And on the list, we said, make sure that we get a retest and it doesn't go back under the 200 because they'll tend to do this and come back down. And it didn't the next day. You can see we had a nice ride up. And here's where there's actually underneath here is the resistance line. And that's where we're looking at this. I'm starting to see, a rolling over of the MACD. We're seeing a cross of the stochastic, seeing a little bit of a roll. It gets up towards that resistance line. That's where you might want to take your profits. And that was at 215.15. And since then, it's kind of gone sideways. And then today, it's just taking a dump. And so you can see it's heading back down towards cost basis. But, I just want to try to get out of it up here and on the upside and let it go down on the other side. But this was a pretty good catch as far as, put it on a horizons list. The other one, this one got put on the other day. It's hard to find these.
So did you get out of that at the top, Mark?
I didn't get into it, but that's why I would have got out of it.
Okay.
And that's why I put it on the list. I usually don't trade the horizons or the under 200 list.
Gotcha.
They're for more risky, but you can make some money on it if you're good at it and you watch it. Just like here's GE Healthcare. Okay, this hasn't traded long enough to have a 200-day moving average. Okay, that's why you don't see one on the chart here. But you were watching this and it popped up above the 9, and then the next day you can see it stayed above the 9, and so this is where I put it on the list, and you see it's done pretty well. It came up, hit the Bollinger Band, which happens a lot. You'll see, price action always play on the Bollinger Band. You see it came down to the bottom here, played it for a little bit. Now it's up at the top. Of course, you got the 50 right here. So if you got into this, you would want to be out at this level, or you could set it up at the 50. But in these kind of markets, I like to play it tighter. You can see the stochastic, which is kind of leading of what I look for, or what the MACD is going to do, is starting to roll. But this was a pretty good catch for considering what the market's doing this week. It's just harder to find, and you got to have a little bit more nerves to do some of these. Let's look at a couple below the 200 list. Yeah, let's do LHX. This was on the below the 200 list. Here's the 200 way up here. Here's our resistance. Here's our 50. Here's our upper Bollinger Band. Here's where people have their sell order set. The problem with this is that the 9 and the 20 are so close together, it didn't know what to do. It's like trying to squeeze out, and it squeezed out on the bottom side. So that it's been trading sideways. We're hoping that it would pop up, at least hit where the sells are, but it's just having trouble doing that. But still a little bit above where we put it on the list. But is this one worth the effort? Probably not, but at least it's up. This is another one, VRSN, that was on the below the 200 list. Again, here's your 200. We saw it came and it popped right here above the 9 with a full candle. And the next day it did the same. So we got in and see 2 days later, it's done pretty well. It got past the 20, came up. And again, here you see resistance. These lines mean something in the majority of cases. Sometimes they blow through them just like here, but they didn't get too far. But you see it went up to the 50. So when you're seeing something like this and the next day, if you want, this is a good place to put in your sells limits right below these lines. In case it wicks up, then you're out. Okay, and it could still go up. Here we got resistance again, right over the 50. So you got two resistance areas really close together. So that's a good time to get out. You still have nice positive MACDs and stochastics here, and that's because we have this little move up today. But if you're risk adverse like me, and if I was trading in this, that's certainly with the markets the way they are and being Friday, that's where I would have probably put something to get out at that level up there. I'm going to go over to just look at some of the ones on my dumpster list, things that aren't trading yet, but things that are on the list for the future. And I'll show you why I watch these. So here's JKS, and this is Jinko Solar. You can see we've had just a downtrend underneath the 9. And then we've had a couple ticks above the 9. Here's a full candle, another full. But again, these lines are pretty close together. I didn't want to play whack-a-mole between these two, but then we popped up again today. But again, here's the sell order sitting right here, and that's exactly where it hit. The thing that got me is it's turned back above the 9. We're still under the 200, so be careful. But you're seeing some, good signs on the MACD, on the stochastic. The RSI isn't at 50 yet, but it's heading in the right direction. So this is something that would go on the watch list. Or, I'll keep on the list, and maybe it'll get under 200 if we can get above these cells right here. So this is what I call the dumpster list, and these are just stocks in the waiting. Here's another one. This is a favorite of a lot of people. Lumina. Okay, I'm gonna move it over a little bit, get a little more history so you can see what's going on here. See, Illumina was trading above the 9, and then it dropped below it right here. And this was 1st of August. And then it just kept going down, had a little bit of a pop here, kept going down, going down, going down. And now you see a little bit of a pop, and you see what it's hitting right here where the sell orders are. We're seeing a little bit of a cross of the MACD. So this is something we'll watch, okay? Would I buy it right here? Not me, but it's on the list because these are the setups we're looking for when markets turn, and see if we can get it back going up. Your next level, if you get past these cells, will be the 20, and then the cells will probably move up, and you'll see more. We are seeing, a little bit of a convergence on the Bollinger, but there's some room to move up if we can get a little more momentum. And if the markets turn. So this is on the dumpster list that we'll watch for a while. We'll do a couple more. Las Vegas Sands, of course, they've just been smoked in the downward way, like everything else. Again, under the 9, under the 9, under the 9. This looks a lot like the last stock we had. We have a bunch of sell. See, people are putting them in tight, when they get in, so they can get out. They don't want to be holding very long. Traders, because you don't know what this market's going to do. It's up 300 in the pre-market, and then by the end of the day, you're down 300, and that's just the game we've been playing. And so you're going to see a lot of these sell resistance lines stops right really close to where price action is. And we'll do one more. This is a Cooper company. And again, this is one that hasn't even turned yet. But what I'm looking at in Cooper is here you have long-term or intermediate term support. It came down and hit, boom, and just started going sideways. And now I'm seeing just a little bit of a turn. We don't have a MACD confirmation. We have a little bit of a rise in stochastic, and we're still looking really bad on the RSI. But these are the kind of things I wait. I want to see if it's going to bounce off this, get above the 9, give me some little a better look on the MACD, and then that would go on the under the 200 list, and we'll see if we could ride. This one has resistance here at the 9, then it'd be at the 20, and here's where the sells are. So they're a little bit higher up, at least today. We'll have to check it on Monday, but this will be on the list that I watch, and you may see it coming up under the under 200 or the horizon, just depending on where it goes. But these are the ones I watch into the future, and sometimes they just go down forever, and I just watch them forever. And sometimes they do a turn for us. But that's where they come from, and that's where it takes a little bit of time to watch. In the future, I'm looking out in the future, trying to find these stocks that are going to give us a turn. And then as they turn and they come back through the end of the 200, which is risky. And then you get into the horizon, which have more of the trading guidelines hit, which is less risky, even though everything's risky. And then you get into the watch list that have more of the guidelines as far as what we're looking for to trade. And then they drop off and they end up on the dumpster list, and that's kind of the cycle I use to look at stocks and to bring those stock lists to you guys. That's all I had today. I know it was a lot. Do you guys want to look at anything or talk about anything?
Yeah, a couple questions. One,
Sure.
so you want them under the 200. That's a good thing, right?
No, you want it over the 200.
Okay,
But I have it under the 200 list because so many stocks are under it.
I
And
understand.
a lot of swing traders, they won't trade under the 200 because it's a bearish market. But
Okay.
for years and years, I've watched stocks go down and then they come back up. What you want to be careful of is when it comes back up to the 200, it has a tendency to hit that, and that's a hard resistance, and it can't get over it. So I try to play it between where I see it drop. Let me pull this up again.
I'm sorry, guys. I got to bounce. I got to get on to another Zoom meeting.
Bob, have a nice weekend.
I wish I could stick with you, but I'll just tell you that I'm back in DNA again.
Oh, you are?
Yeah, oh yeah. I'm definitely back in. I'm pretty heavy in there right now.
Let's take a look real quick. Oh, right here you are.
Yeah, so I got in right at the bottom again, so I'm in a good situation. It's been holding there because of all the news out. There's a lot of news on it, so if you want to look at it, go ahead.
This must have been a good news day here, but it didn't hold, huh? 3 days ago?
It didn't hold. That was the news with I forget now. They made a deal with Pfizer. Pfizer is going to dump a bunch of money into it. There's another one today, another piece of news today. So you can see it's green right now, but it hasn't sold off. But the insider, he keeps selling his shares. He just put in a request to sell another 179 million in stock. So he keeps selling, which I don't think is too good for the stock. But
this has been good for you, Bob, because you've been like hitting these, hitting out, hitting these, hitting out, hitting these. So
I'm sitting now just waiting for the next pump on it and start taking my profits on the way up.
So
make sure you watch
Sunday night.
Yeah.
Sunday night, there's some news going to come out about the cure for my zit from DNA. So it should pop. So be ready.
Oh, there you go.
I'm 54 years old. My daughter goes, "Is that a zit?" I'm like, "Yeah, I haven't had one since I was in my teens." And she's like,
"I think it's all the stress you're under, Trent."
Yeah, I do a lot of this.
Well, thanks.
Don't worry, as
Bob.
you get older and you hang out in that Florida sun, don't worry, you're gonna have a lot more issues.
Yeah. I
Have
don't
a
want,
good
I
night.
don't want the
Yeah.
Buffett. I don't want,
I'll
I
see,
don't want
I'll
to end
see
up
you
like
at
Jimmy.
I'll see you at the 4 o'clock.
All right. Have a good afternoon.
Take
Thanks,
care.
Bob.
Take care.
Bob,
So getting back to your question, Scott, this is under the 200. Normally, you want to be over the 200.
that's kind of what I
To-
thought.
And that would get you won't see anything on our watch list that's not over the 200. That goes on that list where we have the paper trade portfolio.
Right.
You won't ever see anything on that. Okay. This here, it provides us an opportunity to look at markets. And what you're seeing right here is we're under the 200, we're dumping, and then we're trying to find where it's going to bounce and come back up. And so in the case of Cooper here, I'm seeing 3 days where it didn't get past this long-term, this intermediate term support. So I want to watch and see if the 9 comes back, and if we get price action above the 9. I want to watch and see what the MACD does and see if it gives us a positive cross. I want to see if the RSI gives us more momentum. And then what you do, and it's risky, is try to ride it up. And you got all these resistance areas. It's a lot more risky than the watch list. And then, when it comes up to the 200, is it going to hold? Or do you get out? That's a big line of resistance on the 200. Let me roll it back here. Oops, where'd it go? I just want to go back. See, here it came up. Let me go. Just kind of zoom in on that area. So here we came up, hit. You can see how long it takes to get above. Then it finally got above. So you see that a lot with the 200. Let me go back a little bit here. Well, where were we? Oh, hold on. Got on the wrong chart here. No, here's the 200 just started on this one. Okay. Sorry, guys. I got on the wrong chart. Oh, here we go. Yeah, back in here. Came up. We were under the 200. Here it came up, it got over basically the 9. We're looking down here. We can see the MACD's coming up. You see the stochastics coming up, the RSI's coming up. Okay, and then boom, we hit it down. This is what you'll find. It's more volatile, Scott, and that's why it's more risky. What happened here is it came up and it hit what it hit. It hit the 50. And the 50 is a big resistance or support level too.
Right.
Then it came back underneath the 50 and underneath 9, kind of rode it. And then something happened. It gapped it way up in 2 days. I don't know if it was news or what.
Yeah.
That's how volatile these are when you're under the 200. So it's very risky. I don't tend to trade under the 200, but there are people that will, and there is money to be made if you want to take a higher level of risk. You can use the same principles. I use the same trading principles. The only thing that's different is we're under the 200.
Got you. Okay.
So
How about Chris?
and CRISPR.
Yeah.
Let me go back to, let's go 6 months. So that's CRSP.
Yeah.
Okay, CRISPR. So CRISPR's
Whoa.
playing around, just playing around the 9. You can see the 9 though is it's kind of in a nosedive right now.
Mhm.
We are seeing a little more improvement on the MACD, but it hasn't crossed yet. I'd like to see this. There's probably, you can see it's coming out. It's hit the intermediate term support several times. So this is kind of like that Cooper we just saw. We want to see if it's going to turn.
Mhm.
And then it'll have to go through the 20, and here's your cells up here. But at this point, I still think it, I want to see it bounce. I want to see it get away from this support line down here, or if it drops through it, and then it becomes resistance. So you got the right idea. Again, in these markets, you can get kind of faked out a little bit. Like here we had a nice sideways, and then it went up above the 9, and then boom, off we go. We're down, then it comes up, sideways again, boom, down. So this has a pattern of down, sideways, down, sideways, down. And we'll just see if that's going to happen again, or if this support actually holds it up. So this would be something that would be on a dumpster list for me, Scott, not just watch it.
Say that last part again.
This would be something to be on my dumpster list, stocks that are in the dump, but have a potential to come back and set up.
But there's been some news on it lately on Seeking Alpha, some positive stories on it. So I was
Yep.
just trying to follow it along. I've been on it since the beginning,
Right.
since I came on. Of course, been a loser. I lost it all, so I'm just hanging in there. So I was hoping
Yeah, this
turn around.
it may. I don't know if CRISPR actually makes money. It's hard for these stocks in a rising interest rate environment that that have to go out and either put more shares in the market or go get financing. So I don't know because I haven't looked at CRISPR in a long time. Trent, do you know? Do they make any earnings or?
I don't really track it. I did
They
that
didn't
book.
back in the day, but yeah.
Yeah, the book that Kerry was talking about just a week or two ago, The Coming Wave, they talk about CRISPR and its AI development and the power that they're creating with their products in the artificial intelligence world and how it could help in healthcare. So I think it's probably one of those that as our AI develops and they get, approval on stuff and that kind of thing, you would see them come up. But I look at it as more of a years down the road kind of an event that you buy it to profit from it from years from now, because healthcare is just so tough. Pharmaceuticals are tough. Those are companies that are tough to trade and all that. But I think if AI is definitely one of those that's going to help, the artificial intelligence or help the healthcare world. And CRISPR, I believe, is in the middle of it. So it's they're doing something that I think eventually will pay off. It's not today.
Right.
I think that's how you have to look at it, sort of the Buffett approach to it. You buy it because you buy a railroad because 15 years later we're going to really need it, kind of thing.
We've had them since the 1600s, so yeah.
Yeah, I mean, what was it? Burlington, was it 04 he bought that? He bought Burlington?
You bought Burlington,
Yeah, like in 2004,
yeah, as a while
2004.
back. Yeah.
Yeah. So I think what CRISPR is probably one of those that you got to look down the road and go, okay, where are we going with healthcare and all that? So
Well, I still have it, bought
Yeah.
it, but
yeah, I think that's
we're died, but I got so much money into it. I don't want to sign up for that loss.
yeah.
Right.
I think applying what Mark is teaching here, to not just the short term, but to the long term is a great, it can help reduce risk, but it's also asset allocation. How much are you allocating to a portfolio? I remember, back in early 2000s meeting with clients and they had Bell South stock and all their 401k was in Bell South. Where's Bell South today? They got wiped out.
Same place Emron is.
Right. And so I think that's when it comes to allocating your assets, especially in equities, taking no more than a 6% position in an equity position, and trimming it as you make profits on it just makes it's just basic risk management. It's what Paul Tudor Jones does. It's what, Steve Cohen. It's what all these major, Jim Simons, probably the most successful investor in history. They manage their risk. And I think that's part of doing this.
And that's a lot of swing trading is you want to manage your losses so they're the smallest amount of losses with the biggest amount of gains. And and limit your losses. That's why, we only had 8 trades this month, but only one was a loss,
Yeah. And the key is not
Gave
to
us-
put all of it into that one trade,
Yeah,
is to manage the allocation of it is, I think,
Yeah.
very important. Because
well,
if you had put it all in one on that one negative, it'd been like, ugh,
yeah, it's like going to the table and putting it all in black or red.
Right. Yeah.
Yeah.
Don't.
Well,
Yeah.
and again, you gotta be aware of market conditions, which is, it didn't used to be this. Everyone was waiting for what the next Fed statement was going to be,
Right.
and we move from one market condition to another now, and that's how we've been living, and it sucks as because you do have to consider that when you're swing trading, those market conditions, when earnings are, when distributions are, when the Fed's going to talk, when these reports are coming out, and it's a big deal. And so you either have to make a decision, I'm going to plow through it and hope it doesn't, wipe me out, or I'm just going to sit out a little bit and watch it, and then I'll get in between these things, and I tend to get in between the market conditions because it just seems like, again, market's up in the morning, and then it goes down a little bit, and then it goes up at noon, and then the institutions come in and wipe you all out. And by the end of the day, you come back and look at your charts, like, oh, we're down 300. How'd that happen?
Yeah. Yeah.
And let me go.
Story. You guys want to hear?
Now that the Dow's down 142 now in the hour that we've been here, Nasdaq's down. It's up 21, and the S&P's up 10. So it looks to me, the feeling I get, we're probably going to close in the red. I don't know that, but it just looks that way.
I've
The
got
momentum's starting to move.
I've got some VIX December puts. Granted, they're way out of the money, but it's amazing how I've gone from a negative, bought them a couple weeks ago, a negative, 10, 15% this morning to now I'm positive 4.1. All in just a matter of the movement of the market. It's yeah.
It's a crazy market. Yeah. And once you get below that 200, like on the Dow, it's hard to get back above it, and we'll just see how it works. So,
yeah.
Hey, Trent,
Yes, sir.
did I see Kerry made a video using that SFX trading platform.
Yeah.
Did he buy that, or was he using yours?
I don't really know. I think he asked me about it, and we talked about it. So he's used mine, I think. Yeah.
I'm thinking about it. Would you recommend it?
Here's the thing about it. It's one tool in your toolbox.
Right.
Okay. And Kerry and I've had discussions about this. What Mark has taught Kerry, amongst many other people, is the foundation of investing. And you can add more tools to your toolbox, but you also can get really confused. And it is just one tool that Kerry uses. So I would encourage you to, use the foundation tools that Mark is teaching us here. And in the future, we're going to have new products and new services, a part of Platinum, that are more long-term. But the foundation that Mark has taught, I think allows Kerry to explore, how do I add to it? So to each his own. I know Mark, he works off 4 or 5 indicators at the most. I know guys who work off 1, and I've heard guys working off 20. And I would say I'd be absolutely confused at that level.
That'd be way too much.
Yeah, I think you have to educate yourself and develop yourself as a investor and trader and find what works for you. But what I believe Mark has taught us is so valuable, and it's the foundation of what you build your investment strategy and process against. So it's one thing that Kerry has looked at or is used. And so, but I believe you can't have just one tool in the toolbox. So it's yeah. So hopefully that answers your question. So yeah, but it's just putting in the hours, it's putting in the time. And doing that.
And and be patient,
Oh,
you
yeah.
know, and, you know,
It's a long
if you
term.
don't, if it doesn't feel good,
2-3
yeah,
years.
if it doesn't feel good, Scott, don't worry about not getting in. And if it does go up, don't worry about missing it. There's always the next train coming down the track, you know?
Yeah.
Well, I
I,
guess in Kerry's world, another bus coming down.
right.
So-
For me, I focus a lot on the bond market,
Mhm.
and that has come about in the last 6 years.
When you say
Because
bond market, does that include treasury notes? Or is
it's
that-
all bonds, mortgage-backed securities, U.S. Treasuries, German bonds,
The corporates, junk bonds.
corporates, everything, because it's such a major market. And now with the derivatives world like exploding as it has, I look at those things, and so I've built, my theories and thesis against a lot of those things I've learned. But you got to be, in my opinion, it's a never-ending education, and you always look for, little things. So yeah,
Where do you educate yourself on something like that?
Google. I read a lot about, Twitter. I spend probably a half an hour a day on Twitter, and I follow certain guys who are in the banking system or in the bond market. Jamie Dimon came out last week and spoke about how the US government's going to have to refinance a lot of debt in the near future and the pain that comes with that. It's just, it's not just one place, it's just many different places where I catch on to somebody who's talking some level of intelligence about something I don't know about, and I just continue to dig. It's just my curiosity sort of runs rampant. So yeah, no, I think I was took a class for the Series 7 many years ago, back in 1999, and this guy was 38 years old, and he was recently retired bond trader. He was with Bear Stearns back then, and he said, it was funny. In one session, somebody asked him, why bonds? He goes, you can make a ton of money in bonds, trading bonds if the market's right. And it opened my eyes to, oh, it's not just equities. And when this guy said on his last year was 1997, he said, yeah, my miscellaneous expenses were 120,000, and that was all the entertainment and food expense. I was like, you spent $10,000 a month on food? He goes, yeah, because I was making, you know, $6-7 million a year trading bonds, for a company. And I was like, Jesus, that's where the money is.
Sure.
So, and if you think about it, that's how we finance. That's how these corporations finance things. That's how municipalities finance the streets.
Our
Bond.
economic system is debt based.
Yeah. So
we don't make money unless we're borrowing money.
Yeah. So anyhow, but yeah, that's something I keep track of. So anyhow, well, we're at a while.
Yeah.
So we'll
Good
wrap it
class.
up here. Yeah.
Thanks for participating, Scott. We always appreciate it.
Glad
All
to
right.
be, glad to learn.
All right.
Yeah.
Have a good weekend.